Good morning, everyone. Welcome to the European crossover webinar. We just received the market manufacturing flash PMIs with manufacturing PMI coming in at 39.5. They're expecting 38. Services came in at 28.7. They were expecting 25. And composite came in at 30.5. They're expecting 25. We did get the flash PMIs earlier. And that's going to be here with the French PMIs. Manufacturing came in at 40.3, better than expected. Services 29.4, well, 29.4, also better than expected. Composite was 30.5, and bear with me. And we did have German manufacturing flash PMI 36.8, a little bit weaker than expected. Services 31.4, better than expected, and composite just a little bit weaker at 31.4. Now we do have UK data at the bottom of the hour. Flash composite, we're looking for 25, manufacturing at 36, and services at 25. And then as we come into the US session, we are going to be looking at jobless claims. See how that comes up. They're looking for an additional 2,400,000. That's what they're looking for. Probably was 2,098,000. So we'll see how that plays out. And let's see. Also, we do have Philly Fed index. There, the prior was minus 56.6. We'll see if there's maybe that may have possibly bottomed out. We'll see. Probably not. And then, of course, we do have Canadian data, new housing price index. And then we do also have at 9:45 Eastern, I'm in Central Time, so it's going to show 8:45, but 9:45 Eastern, we're going to have U.S. market flash PMI. And the prior one was 27. So we'll get some market moving data with those. And at 10 a.m. Eastern, we'll have existing home sales, as well as leading index. You can see here that we have seen the S&Ps. They opened up right here where they closed around this 2973, and we've seen this market come off quite a bit. We finally did actually hit a level that I was looking at for this 2943 was the price I wanted to get out. I actually got out in Asia with Jane right at 29.48, and then I actually reshorted it at 29.57, and then got out at, I think it was 29.51. So it actually evened out as if I would have gotten out here. Well, had I hung on all the way. But you can see here how they've been trading right up here against VWAP. I was kind of hoping we can jump up here around the 29.60, maybe up in this area here, see if they could make a run up there, but they're staying within VWAP. Things have turned around here a bit. One of the things that, obviously the market, and I'll touch on this, was one of the things that did bring the market down initially, a moment, that, brought us down initially was the whole thing, the Senate voting for basically this scrutinization, for the Chinese companies, they're not controlled by Chinese listed companies controlled by the government. And if not, they would be delisted. And the market actually came under some pressure initially. Baidu and several other ones had fallen down. But then the market basically kind of like ignored it. But here's the deal, is that a couple of key things that I think were important is, if you look here on the daily, we're right here at the 200-day moving average. I mean, we just about almost got there. And I mean, look how far this market has come from down here in the March low. I mean, I'd seen here that the S&Ps have actually rallied 36%. And so my take was that the market was just simply ignoring a lot of this stuff, and we're really overvalued. Now, we did see the prior day, not yesterday, and just to put this in context, we saw this market sell off. Remember, I I myself had just said, adios. So then actually I said I left early, but I didn't leave that early. I think I called it a day like at 2:15 or something like that. But then we saw the market really come under some pressure, and the market really, come down. And in the I think we came down to like what 29.14 or something like that. And then in the opening after that, they dipped as low as what 29.09, and then they turned around and came right back, with a vengeance. We saw the NASDAQ, we saw all-time highs for, which one was it? I think it was Facebook was all-time highs. Amazon, I'm not sure, it might have been all-time highs there. I could take a look though, but they had pretty good runs. And so the market was basically like ignoring it. We saw the Russell take off like gangbusters too. But here's the deal, and I thought it was a pretty good anecdotal story that I saw on Fast Money, was that, and I was discussing that with, or posted in the chat room, I was discussing with Jane, was that Lowe's, which I don't know if any Europeans might know Lowe's or not, but like a home improvement, like a Home Depot, and that stock before the coronavirus thing was trading at 122. When the coronavirus hit, it fell all the way down from basically around 122 all the way down to 61. Well, then with the whole coronavirus thing, people are going to be at home, blah, blah, blah. Some are going to be doing some home improvement. So we rallied 100% all the way back up to 122. And so that was yesterday. So the thinking was, they were saying, hey, look, this market is getting a little bit overdone as far as valuations. They knocked it too far down. Now they bring it back 100%, and people are just trading like, basically looking at things in nonsense. I mean, there's just no real valuation. And here we were right up against a 200-day moving average, or pretty close to it, and why I ended up keeping my, my shorts. But that's where we stand now. And I think now one of the things was with this whole scrutinization is that one of the things that, I saw somebody saying on Twitter, well, do you really think that that's going to happen? And it was a well-known guy was saying, do you really think that's going to happen? And I almost answered, but I said, I'm not going to even answer. But I thought to myself, I go, the question is not whether you actually think that could potentially come to fruition. The question is, really is actually the risk. You have to factor in the risk, because once again, it's already passed from the Senate. And I saw someone, I forgot if it was Trading Audio or someone make a case that go, well, you know what, this could pass in the House, because then if the Democrats don't pass it and they control the House, then Trump's going to play on the whole thing about either they're weak, they're falling into China. So they could potentially end up passing it also. And that concern, and once again, I mentioned that earlier yesterday, was that it's not like as if we're down here. We're way the heck 36% rally with really spitting distance, literally spitting distance, 14 handles away at the time from the 200-day moving average after 36% rally. So my take yesterday was that, we can easily come down to 2780. I mean, 2894, I believe, is the 38% back. So we can easily come down there. And I think now today you're going to see now the market putting pressure. Yesterday, I think they just squeezed a lot of shorts out. And then what attributed that to that also was, I think Facebook signed a cloud deal with the Defense Department. And then, of course, Google's making its highs. And, of course, Amazon, which honestly I don't get at this point. I really don't, because Amazon, I can see why they rallied initially, because everybody was stuck at home, all this online orders. Now it's going back up again. It's back even further, because now they say, well, they're not going to be. So, you can't have it both ways. But my total take is that we could come so far, so fast. And I thought yesterday, I kind of feel bad for anybody that may have gotten blown out of the shorts, because I think they just got taken to the cleaners, because, like I said, up here against this 200-day moving average is just crazy that we could extend any further than this. It was just like everything had been exhausted, and all these fake coronavirus stories. All these companies, they just go and say, I was going to make a joke, that, hey, you know what, there's a new coronavirus, company now. They just did some testing on 2 cockroaches, and now we're looking at some positive results. I mean, that's all the company has to do, and they get all kinds of money thrown at them. But like I said, I think, and the only reason I'm saying that is to put things into perspective. Look how far we had rallied. I mean, this isn't like 10 days, 2 weeks ago. This is only since Thursday, and yesterday was Wednesday, and we had rallied essentially 220 handles. So, I mean, we're just really 30 handles off the high right now, and we've rallied nearly 220 handles. So that's what I'm saying. For us to pull back to, let's say, just sub 29 right in here, that's only a 38% back. So that's what I'm saying. I think you're going to see that only. So we're seeing that here right now. As you can see, the VWAP has just kept this market in tune. I actually had, when I added on, I actually came close to top ticking it right here. I think just about top ticked it. When I added up, was it here in Asia? But anyway, I added it right there at 57. It nicked up there, and I actually wanted to be a fill at 58, I think it was, and I was able to catch it on the way back down. But obviously, I could have ridden it lower. We did kind of bounce up a little bit. We dipped, and I missed this right here. This bounced back up. I could have taken another short right now at VWAP, but I thought I was working an order at 58, and now I'm kind of moving it up to 60, hoping we get a bounce to go and sell into, because even though I'm a scalper, I don't mind, and I didn't mind yesterday hanging on. I was like, no, I'm not gonna get knocked out of this thing. I mean, honestly, the only way they were gonna knock me out of this thing was for them to basically move above 3,000. Even though, like I said, because I thought this is silly. I mean, here's the 200-day moving average, and this thing is just going up, and it's just like, who cares? I mean, 33 million people unemployed. Who cares? Let's keep on rallying. So I think it's just a bunch of BS. So I think we will go lower. And like I said, I think I'm just waiting for rallies again, just to try and sell into this and hold on to this. And I think we will have to come in, especially as these China barbs going back and forth between the U.S. and China. I think at this point, going to probably push China into a corner where they're going to push back pretty hard. What that may be, I don't know, but you have to factor in that risk. Anyway, that's my take on that. We'll go on and pull into the news. I just want to go and share what my overall perspective is on this. Let me just go on and pull up. Once again, the news isn't very much anymore. It's just the dollar, although I guess I could see if they have that one feature called, we used to do it, was it the day ahead or something like that? I can take a look if that's, they used to broadcast it a little bit earlier. Let's see if they have the morning bid. That's what it was called. Let me see if they have that here. Bear with me. It was always good because it kind of gave, yeah, it is. Here it is. I will read that. And actually, that just came out just right after we started. So I will go over that after we do this. So the dollar firm as C-No-US tension prompts caution. And that's my take here. Is that wasn't factoring enough, and you can see we're still coming down here. I wish I actually stepped away. I would have at least taken a stab here against VWAP. But it is what it is. The dollar clawed back some of its week's losses on Thursday as investors brought a more cautious tone to trade, while Sino-US tensions and weak economic indicators dampened the mood. The Australian and New Zealand dollars gave back about half of their overnight rises, as did the euro. The British pound was pressured as soft inflation stoked more talk of negative rates. The risk-sensitive Aussie and New Zealand was last at 65.61, nearly 1% under the 10-week peak. The Aussie's been tracking sentiment pretty closely, and today's move low on S&P futures is being reflected in the Aussie, which is a reflection of the broader dynamic. On one side, equity markets are priced in positive news, look through to the recovery, and on the other side is the pull down for the Chinese-US tensions. Stock futures fell about the same margin as the Aussie. Diplomatic relations between the world's two biggest economies have soured in recent weeks, with Trump attacking Beijing handling of the coronavirus outbreak. Now, really, this isn't so much about that. I've told you that before. This is about the deflection game. This is about he wants to push the focus towards China messed this all up, blah, blah. It is so that it's not about how I was the one who poorly handled this. I saw a news story yesterday that although the U.S. only has 5% of the world's population, we have 30% of the cases of the coronavirus outbreak. So the more he focuses on China, it turns away from the administration's poor handling of the preparation for the outbreak. So that's what this is more about. But once again, you got to focus on that. And look at this, we're still pushing here near these lows here. So trade tensions have also flared between China and Australia over Australia's leading role into the push for a global inquiry into the origins and spread of the pandemic. The latest salvo came when Trump took to Twitter later on Tuesday to accuse China of a massive disinformation campaign seeking to damage his re-election chances. So they continue to rip off the United States. He's been singing this song and dance for so long. Supposedly, when he was going to get in office, the world was going to respect the U.S. and he was going to have all these great deals. And, you know, it's all just a bunch of junk. I mean, I'm not trying to play politics here, but I'm just saying, hey, I'm telling you what it is. You know, here we are in basically the fourth year, and I thought he was supposed to spin everything around within a year, and he's still crying about things when he was supposed to be the one who was going to fix everything. Clouds ahead. Plenty of broader positivity remains with the yuan, Aussie, Kiwi, and Euro remaining ahead of the dollar for this week. The next test of purchasing manager surveys due in Europe. We just covered those, Britain and the U.S. Though the day from and they land amidst bad news elsewhere. The WHO reported the largest single-day jump in coronavirus infections overnight as global case numbers approach 5 million. Japan reported its steepest drop in exports in more than a decade and cratering factory activity. A fifth of firms they're worried that they don't have enough cash to ride out a prolonged crisis. In Britain, weak inflation is driving the bet, so the Bank of England may cut interest rates below zero. The pound was under pressure against the greenback, slipping to 21.98 and fell to a two-week low of 88.98 pence. Negative view of we previously held for the Kiwi on the back of a dovish reserve bank can now be extended to the pound, and the BOE said Terrence Wu, FX strategist at Singapore. For now, with the soggy dollar protecting cable's downside, we prefer to express this view with a higher euro sterling. And let me go and bring on the news. Like I said, the morning bid. Bear with me. So the glass is half full or half empty. Read it whichever way you want. Things are bad, but hey, there'll be more stimulus. The lockdowns are easing, so economic activity, including the battered airline and leisure industry, will get a boost. U.S.-China relations are flaring, but maybe it's pre-election posturing. You doggone right it is. All the data is terrible, but it can only get better from here, hopefully, and there are bright spots within the numbers if you really look hard. But markets seem to be taking a dim view of the world today, with world stocks sliding off 2.5-month highs. Wall Street rose on Wednesday, led by tech giants Amazon and Facebook, as well as hopes of more measures by the Fed and congressional plans to extend the Paycheck Protection Program. We got some ugly numbers from Japan, showing exports fell 21.9% in April, year on year, as U.S.-bound shipments slumped 37.8%, the fastest decline since 2009, with car exports plunging 65.8%. Japanese shares have fallen 2.5-month highs on expectations the central bank will expand assistance to small firms. Another dismal trade report from Korea, where 20-day exports declined by 20% on year imports fell by 16.9%. But to illustrate why the worst could be behind us, Citi report points out signs of improvement hidden deep within the data, such as a rise in per-day exports, higher exports to China versus a month ago, and a rise in semiconductor exports. There are more reasons to be risk-off today, not least a U.S. Senate bill that could block Chinese companies from listing in the U.S., but they will add to already simmering tensions with China over the origin and speed of the coronavirus epidemic. European shares are starting the day with losses around 1%, while the Wall Street futures are lower. The dollar index has firmed, and bond yields are broadly lower. U.S. weekly jobless claims are expected to at a seasonal adjusted 2.4 million for the week ended May. Reuters survey showed high, but well off the record 68.67. A raft of Federal Reserve speakers will also be on the wires, including Fed Chair Jerome Powell and two emerging market central banks, Turkey and South Africa. In European corporate, AstraZeneca received agreements to supply at least 400 million doses of the COVID-19 vaccine, and the rest of this isn't really going to apply to us, so we won't worry about that. Let me put this off here. So we see we're back here ticking over here. Like I said, I stepped away. I would have liked to have sold this against the VWAP. But I did have an order, but it just wasn't hit up here at 58. We'll see what we can do here. Remember, I talked about, I thought we would get a bounce if we get down to 29.39. So we'll see what happens there. We'll go on and move into now the analysis. And bear with me. So the euro extended its rally, closing above the prior day's high. Although the pair eclipsed 110 bias chart resistance, 110 bias chart resistance will remain at 982, and support will be 927. So we did get above 110, but we're going to keep the resistance at 982, and support will be 927. Let's go move on to the cable. We do have those economic numbers coming out at the bottom of the hour. Flash PMI. So the cable stalled on Wednesday in a tight range as the market takes a breather before its next direction. Resistance will be 23.30 with support at 21.35. So once again, we took a, look how tight this range was, and we've like, hey, we're really quiet, and we're thinking, hey, is it going to push up, push higher? And that's where we got a little bit wider range. I think on Wednesday, I think we had 23.38. We brought that down a little bit. Yeah, it was 23.30, so we brought it down to 23.30, trying to give it enough, some air in case we do want to make a stand. Doesn't certainly look like it, and with S&P futures down, certainly the Dow probably keep the dollar on the bid, but support's going to be 21.35. And we'll go move into the Aussie dollar. So the Aussie continued its run up with the aid of equities. Resistance will be 66.27 with support at 64.78. We're only giving some open space down here because we had really stretched this. We previously had the 65.69, and we even pushed above that, and we wanted to give it some room in case we pushed a little bit higher. But with S&P futures on their lows or close to those lows, certainly doesn't look like that's going to be the case, and we're starting to see this pull back. Now, it doesn't mean that we're going to get to 64.78 today. I don't believe that. But once again, our bias chart is basically set for the next 24 hours, and potentially we could get down to 64.78 by tomorrow. So actually, we already had 77. So okay, we'll just move that by 1 pip. Of course, that was from yesterday before we made that high up. And we're giving it the 65, 66.27. We could leave it here for the 65, 69, but realistically, you got to give it that room. I don't think he's going to make it up there, but we will give it the benefit of the doubt, which is 66.27. And with that, we'll go and move into the Kiwi. We'll also cover the UK data as soon as it comes out. So I'll pull up the economic calendar, and we'll have it with the cable there. On to the Kiwi. The Kiwi ramped higher, closing above the prior day's high. You can see that here's that prior day's high. We ramped higher on yesterday, that is Wednesday. Closed above the prior day's high as risk on was the name of the day name of the day in equities. Of course, that was yesterday. Resistance will be 61.63 with support at 60.50. 60.50. Obviously, 60.50 seems way down here. But once again, if we do see that pullback, potentially we could see 60.50 by tomorrow. And the bias chart is for the next 24 hours. So 61, 63 on the upside. $60.50 on the downside. I was hoping to get a better bounce in these SPOOs, but it doesn't look like it. But at least the momentum's turned lower. I think it's silly that the rally. I mean, I think some people really got snockered yesterday. I mean, if you think about the move that we saw on Wednesday, when before the U.S. closed, we got down to as low as 29.14. We got then in the reopen of the session got as low as what 29.09, and then anybody that I was saying yesterday got short ahead of 29.25. They just got snockered yesterday. Can you imagine if you got short at 29.25, which was really 16 handles off the low? At the height of yesterday, you were down 50 handles. So I think a lot of those people got just cleaned out, and we're just seeing now the market just paired back in. Anyway, let me go and get back into into the FX. So let's move on to the dollar CAD. So the dollar CAD stayed in a tight range on Wednesday, being pulled by the rising crude oil prices and rising equity prices. The pair remains vulnerable. Bias chart resistance will be 40.19 with support at 38.45. So 40.19. Once again, we're giving it the benefit of the doubt. I think it's after this big black bar, really the potential is for us going down. Now, the potential for this to go higher is going to be from those to say, hey, wait a minute, if we get a pullback in equities, we can see a bid here, which is true. But once again, I think the risk still, at least initially, still remains for this to work lower, but we're just sitting here. So, and then these SPOOs are right on their lows. What a difference from yesterday. Oh, my God. I mean, these SPOOs are like, Jekyll and Hyde. Yesterday you couldn't stop them from going up. Now you can't stop them from going down. They're actually on their lows at 40. We just hit 42.25, 42. So resistance is going to be 40.19. And support at 38.45. Let's go into the dollar peso. So the dollar peso closed below 24 cents, just ahead of 23.60. Resistance will be 24 cents with support at 23.36. Let me see. I wonder if this is even right. I don't think that's right from the, it seemed like that was yesterday's. Yeah, that was yesterday's. I don't know. I guess it didn't update it in the peso. And I know I did the peso, but, so let's get, that was the day before, because look, that was then. But, so now this is a close. So we actually closed well down here, and I guess it didn't save here. But, so considering we closed right in here, we actually closed at 23.18, and we actually had support at the time, was at the time for the prior day was 23.36. So support, and we're actually rotating lower. And let's pull up the data. I said we would cover that, so let's go back to cable. We've got the UK data coming out. There you go, flash composite, flash PMI. So here we go. They're looking for 25. Manufacturing looking for 36, and services at 25. So here we go. Oh, we got 20 more seconds to go. There we go, 28.9, a little bit better. Not much of a change. Look at that. Doggone, dead as a doornail. So composite came in at 28.9, better than the expected 25 on the poll. Manufacturing came in at 40.6, better than the 36. And services came in at 27.8, better than the 25. But not much of a change here. Let's move this out of the way. Okay, so we we did go to get that extended move down here. So we're going to go right there with support. And I think actually that was the level that came right into that level, which is right there, 2305. Good support coming in here this high, and comes with that body and the other. Let's go right there, which is going to be 2298. So we'll go with 2298. And resistance, we'll go with the one that was supposed to be support from the prior day, which is going to be 2336. And with that, we'll go and move into the dollar yen. Dalian formed a spinning top formation. A pause is expected, or simply more spinning the tires in the mud. So the resistance will be 796 with support at 714. And on to the cash dollar index. So the dollar index finished weaker, but was able to defend the 99 area on the close as bias chart support came in at 98,908, which held overall. Resistance will be 99.63 with support at 98.90. So that's going to do it for the majors. So we'll go and move into the cross rates. And we did see, look at this move has continued to be solid. Look at that, 3 good days, and even closing at the highs yesterday. But like I said, now that we're starting to see some risk off, we may go and now see a pause. So resistance, we'll give it the benefit of the doubt, although I don't think it's going to go. We'll just go right there with this high, right there, which actually just about hit it, but it's going to be 66.18. And support, well, I would expect a pullback as risk comes off, and you can see the most touches coming in right across here and here. You see right there? So let's look for a move back to 65.28. Let's go into the euro yen. Now the euro yen closed Friday. Oh, that's from this last week, so we don't have the updates. We only do the updates. At least I do it every day. Is on the majors. But look at this, boy. This has been quite the move back. Look at on that. Holy smokes! Giving it the benefit of the doubt right there. You see the body touches right here. This close, and even the close there. That's going to be resistance. So it's going to be right there, 1852. And support, I'll be buying this on a pullback, but a good pullback is getting, you see all these wick touches here, along with this body here, that's going to be your support. And even confluences here with the wicks here. See that? So it's going to come in at 1774. And to the euro one. Well, you can see here, remember we talked about this, trying to put in this double bottom, and they're just really not going in it anywhere. So this is going to remain the same. No changes here. No changes here whatsoever. From yesterday, we're just stuck in the mud. We allowed for a little bit wider range in case they do push, but we're just stuck in the mud. So no changes here in Euro odd. We're going to move to Euro Kiwi. Yesterday we closed on our lows. And we had 78.88. We're trying to defend this area here. But with the Kiwi weakening now, you would think that we'll be able to push a little bit higher. But what we'll do is we'll go with the wick here, see right there, and the close there. And really that's where they're holding right there, or just a hair underneath it, which is 78.39. But I would expect the Kiwi now to weaken. And resistance, we're actually going to go right to this body touch to see if they can extend it over the next couple of days back up to this area, which is going to be 80.42, 80.42. On to the Aussie yen. Boy, we've really pushed this up here at this level, and we're just going to go with the level right there, which I think we may have already had for 71.09. Actually gave it a little bit of room. I saw that from yesterday, from 71.29. But we'll go with this just straight. We were giving it the benefit of the doubt yesterday because that's where we're going with the body toucher. We're just going to go with the level here, 71.09. It actually shows, look, it's a 7, but we'll go right there, 71.09. And support, well, if we do get a little bit of give back, it's just going to be on these, you see the wicks coming across, 70.17, 70.17. And let's go and move on to the guppy. kind of stayed in a relatively quiet session, just like the cable itself did yesterday. Support is going to be right there at that body, right there, which is just under the day's low, 3108. Actually, that was what we had. Okay, perfect. 3108 is what we had. And the upside, just the level right there, which is 3258, which was what we had yesterday. Like I said, that called it pretty close right there. And lastly, starting odd. Well, this continues still to weaken, and we even broke below this low here. Look at that yesterday. But with risk coming off, we expect the Aussie and the Kiwi to weaken. We're kind of making a stand here. You see this high right there, the wick high? That's going to be the support. And it's just below it, but I don't think we're going to get there. But just at least you know where your risk is, which is 84.96. We broke that area, and that was key support. Resistance is going to be the open right here on that body, which is 86.88. 86.88. And there we go, and that does it for us here with the pairs. And we'll see you in the chat room, and thanks for joining us here in the European crossover webinar.